Welcome to Investor in the Family Radio, a podcast dedicated to helping you make better investments in less time so you can live more life. My name is Brian Bain, and I'm your host. You can find more shows and other valuable content at investorinthefamily.com. Well, on today's show, we have Chris DeMuth. Chris, welcome to the show.
Thank you for having me.
Always great to have you with us, Chris. And Chris is here. We're gonna have a fun conversation about. There's been lots of things going on in the regulatory environment and this year so far, whether it be tax legislation, big new M&A deals going through recently, or tariffs with China and other countries. And so, Chris, I'm actually gonna kind of open up that entire world right now and just ask you to start kind of speaking your thoughts into what you see going on, what your thoughts are, pro or con on things, and kind of where you see opportunities.
Great, Brian. Thank you for having me again. I'm just excited to get another chance to speak with you. I think that there have been some dramatically positive public policy changes since last we've spoken that I've been researching, thinking about, and making investments based on those topics. The tax reform has been very positive for both equities and for M&A, where you have targets that all of a sudden have become much more valuable, but also much more transparent in terms of what they're worth. I think that that's started to drive real deal flow, especially in financials, and also regulatory reform. In many cases, regulatory reform can act on equity value even faster than tax changes can. And regulatory reform, again, in banks and thrifts has been hugely positive. So a lot of the things that I normally think about domestically have been going extremely well, have kind of driven market returns and individual opportunities. So that's the good news.
Well, real quick question. You mentioned the worth of companies has become more transparent. Could you flesh that out a little bit?
Oh, sure. If you look, especially one of the areas I like to think a lot about is banks and thrifts. If you look at those, it is very hard to get to a sensible deal price. There are thousands and thousands of small banks across the country. They're very likely to benefit from a consolidation wave, as almost every week you see a small bank get acquired. When you had a extremely high corporate tax and a lack of clarity on what was going to happen with tax rates, it became difficult to place any value on a deal that could make sense to a buyer and a seller.
Gotcha.
You have tax assets on the balance sheet. You have taxes just really changing the value. And so once you have a bill signed into law, it just makes it much easier than, even though it might take 3 months or 6 months or 9 months to negotiate a deal, you just have something that two people at an arm's length transaction can delve into on fair terms.
Perfect. Makes sense. Okay. And then you mentioned, then in line with that, you mentioned regulatory reform, and banks and thrifts have been really positive. And I guess in line with what you just said, because it's providing that clarity from a tax perspective and then therefore a valuation perspective, so that consolidation wave can actually move forward.
Yeah, and even more on regulation. I think that if you look at bad regulation, a great environment for bad regulation is crisis coming out of the financial crisis. Bank regulation was not only extremely onerous and expensive and nominally supposed to protect us investors, but of course on our dime. One of the impacts was that you could have a large institution, a Goldman Sachs or JP Morgan, could hire hundreds or even thousands of people to just comply with laws that don't add any value whatsoever other than compliance costs. But that became so difficult for small institutions. Many of them were spending, a double-digit percentage of their earnings each quarter on simply complying with fairly new and pointless regulation. Pulling that back recently kind of compounded the impact of tax cuts and has been very favorable to banks and thrifts. But very favorable to the economy and the deal economy in particular.
Is that where you kind of an area of the market you've been most excited about of late for those reasons, or is there other things?
I think that there's two ways to think about it. Most excited about in terms of things that have worked, perhaps. Most excited about in terms of kind of what has got us to this point since last we've spoken. You've had a number of big deals that have successfully closed. That's worked out great for us. But I think I would kind of flip on to the bad news in terms of what I am prospectively interested or where I'm looking, where there appears to be a lot of uncertainty and deeply discounted opportunities because of that uncertainty, is on the topic of trade. So even though I would give policy leaders high marks on tax and high marks on regulation, we're kind of going maybe two steps forward, one step back with trade tactics that will be sloppy, expensive, counterproductive, and have a lot of perverse consequences, but in the meanwhile could hide some value of individual securities that could be worth owning, and also could give us another leg up if we step back from the brink on kind of trade disputes, especially with China.
Well, let's spend a little more time talking about that specifically, the trade disputes on China. Do you,
Sure.
I mean, you just kind of, I guess you basically gave your opinion, but could you flesh that out more? Because I know that the general narrative is trade war is pretty much always in bad because no one wants to be humble enough to back down, which I can see that in this scenario for sure. But then other people will come in and say, well, but in this case, China has been, instituting negative policies toward the U.S. for a long time, and we need to stand up for ourselves. There's different competing narratives. What do you view is actually happening, and how should we respond? And
sure, if you start thinking about trade, and then let me start by stepping back from China and the United States and that specific trade relationship. From an economics perspective, the most important thing to think about is comparative advantage. Are you producing goods and services that you are best at producing relative to what other people could? And are you spending all of your time, or as much as possible, on where you have a comparative advantage, and then contract with others on where they have a comparative advantage? That kind of makes sense from an economic perspective. That's what is most rational. And then if you ask, well, what others? My answer would be any available others. So the kind of the nation state kind of border kind of nationalistic concern is not really a variable in economics if what you're trying to do is to be rational. Now, the slightly harder lift, but it's actually not that much of a harder lift, is, well, what if other people do X, Y, and Z that is irrational? And the answer to that is that when they support their producers, because producers tend to be closer to political power centers than consumers. Consumers are diffused and generally anonymous, and if you pay much more for sugar than the market would have you pay. It doesn't matter much for wealthy or even average people, but actually makes a huge difference to poor people who spend a decent amount of their money on food. You can't hire even a single lobbyist. But if you produce the sugar, you can hire the best of lobbyists. That kind of relationship tends to transcend our political system and affect all others. If they are subsidizing their producers, that is synonymous with subsidizing our consumers. And that's great, or at least it's fine. And so you should still engage in trade and not do things to artificially discourage it, like tariffs, even if other people are doing the opposite. When you put up barriers to make those imports more expensive, that is taxing your own consumers. when you do it also, it has a reasonably high likelihood that you'll also be dealing with reciprocal policies on the other side. So from an economics perspective, this tends to be an area where you can get yourself into a lot more mischief than you can simply focusing on do what you have a comparative advantage at and focus on that, and the more trade, the better. Of course, when you're trading, you get something for what you spend, and you're presumably getting something of greater value than what you pay. So even the phrase trade deficit, which we've been hearing about quite a bit in the last few months, is very flawed compared to a budget deficit. A budget deficit is money that in aggregate, the debt, is something that we ultimately have to contend with. But we don't ultimately have to contend with a trade deficit. It's also a stuff surplus. And that stuff surplus is stuff that we presumably prefer, and in many cases it's stuff that we add value to. And so it's really kind of an unfortunate use of the rhetoric that can turn people against trade. So setting aside kind of the peculiarities of that specific relationship, trade is good and makes people richer. When you look at China in particular, this is the world's most important trade relationship between the U.S. and China, and one where we are particularly badly positioned to have an adversarial relationship. I mean, it'll hurt them, but it'll hurt us too. And their political system is one where they can have a very long-term orientation, where ours tends to be very short-term, where they have a very strong, stable political leadership. We have our political leadership, but it's one that every few years it is changed up and impacted by elections, and one where they have so recently had kind of history's most spectacular economic growth, but from such a low level that they're demonstrably capable of suffering under. They can, if this turns into a who can hurt each other more, the answer is we can both hurt each other a lot economically, but they are much better positioned than we are to tolerate it for an extended period of time that would become onerous in our political system and onerous compared to our standards of living, what we expect to pay for goods and services.
Yeah, and I've read that in other places as well. I mean, the big dynamic, obviously, you mentioned as far as the political system, and when you've got a ruler basically in place for life versus one that has to be elected every 4 years, that immediately gives you the advantage of the long game. And then also the dynamic of how many companies, U.S. companies depend on China versus how many Chinese companies depend on the U.S. My understanding, I've not done an in-depth study myself, but my understanding is that we have a lot more companies that depend on them than they do that depend on us, which creates obviously another side of the problem.
When you try to be punitive, you start to look at some quirks. If you look at the most recent import taxes, and we're going to start having tariffs that could go into effect tomorrow, aren't even borne by Chinese companies. About 2/3 of China-based exporters are foreign born, not specifically Chinese, and that these policies get to be more and more convoluted when you realize not just how international trade is, but how international the individual companies that you're trying to pressure are. So a lot of the pain is going to be borne by third parties. It's a little tricky for us to do what we're trying to do with policy. Now, on the other side, the Chinese have been relatively sophisticated about not just targeting American goods and services that really do affect Americans, but targeting American goods and services that particularly impact this administration. Soybeans, for example, is a crop that is very prevalent in states that support our current administration. So that there's a lot that they can do using the Electoral College and using policies that they have to be fairly surgically striking against us, and we have no ability in the opposite direction. So the president that said trade wars are good and easy to win, that might prove to be the case, but the more I think about this and look at it, the more complex I find it, and not the way that he's described it as.
Well, and part of this too is, not to oversimplify, but maybe that's actually helpful, is, I mean, just in human relationships, typically whenever you take an adversarial stance against someone else, their response is never openness. It's defensiveness. Right. So you create this defensiveness dynamic, and you wonder, I mean, there is a place to have healthy boundaries and stand firm, obviously, as far as protecting yourself. But when you take the aggressiveness, it's only reasonable to expect the other side to do the same. And then, yeah.
Absolutely. And when you look about right now at how much a trade war could really explode right now, one of the biggest things we can hope for is that the Chinese leadership does not treat the U.S. leadership too seriously, but that realizes that there's a lot of domestic concerns, there's a lot of things that one has to say, and especially as we head towards midterms, that kind of the result of foreign entanglement is often unpopular, but on the way into it, it's always very popular. And so kind of, right. Even though we're not talking about a physical war here, but something that kind of nationalizes our trade relationship with China, will become more dramatic and more anti-trade and more anti-China as we're, in July now, as we kind of get into the months before midterm elections. But one of the things we can hope for is that they kind of are aware of that dynamic and kind of don't necessarily respond with tit for tat. And if you look at the last couple of days, there's some hope that they're kind of very careful about this and not simply kind of raising the stakes every time they hear something that is adversarial from the U.S. side.
Well, and not to spend too much time specifically on China, but I mean, obviously it's in the news and a huge factor, so maybe that's necessary. They've done a fantastic job of playing the long game for decades now, and so it only makes sense they'll continue to do so. And you would look at the major trends they're capitalizing on, also how they're investing throughout the world. I don't think they really need to worry about what a 4-year, however long this administration lasts, I don't know, whatever a current administration in the U.S., I mean, they obviously don't want to look like they're getting pushed around, but I don't feel like they really have a lot of concern either way. I mean, I was talking to someone recently about just a random aside, just like the electronic vehicle growth, and I never realized how deeply rooted that growth is in the Chinese population specifically in terms of their government agenda, but also their desire to become a net exporter of electric vehicles, which sounds random, but I never thought about that long-term dynamic of it. Like, not only are they trying to reduce their own pollution, but they want to take a market share of the global vehicle trade out away from the U.S. and the Japanese and the Europeans. I was like, that's brilliant. And I don't see other countries doing a very good job of thinking that far into the future. So that's just one small example, but I imagine here...
No, it's an important example. And if you look at I think it really shows the difference in timelines, where you look at Made in China 2025, that is kind of the shortest increment that they think about is a longer term than any increment that the kind of American negotiators are focused on. Also, when you look at the recent ban on exports to ZTE, one of the large Chinese manufacturers, still today requires American components. And when the U.S. Commerce Department cut those exports off, ZTE basically shut down. Well, we're in a back and forth on getting a resolution with ZTE really this week and next week that will allow those exports to start again. But at the same time we are negotiating that, it's really just the short term. In the long term, China doesn't want to be importing any of those components. They want to have them all made domestically. So I think that, 5 years from now, ZTE is going to have enough control of the IP that goes into their phones that these are going to be Chinese components. And so we're kind of fighting over something that only refers to the short term. They have very different long-term goals. And so it's really creates an interesting dynamic in that negotiation.
So in light of all this, I'm thinking, there's so much to discuss in these dynamics. No one has predicting power per se. How are you viewing this going forward? How is it affecting your decision making and otherwise?
Well, I have been watching very carefully at the Chinese regulatory decisions around specific investments that we have, and I have so far had a very high confidence that they are still very open for business. When you listen to their political leadership, it's still called the Communist Party, but they sound more free enterprise oriented than the Americans sound in terms of the benefits of free open trade, and are really trying to co-opt multinational corporations to be fellow advocates of not starting a tariff war. A recent example were shareholders of Cavium, which is getting bought by Marvell Technology Group, and that's a deal in a sensitive technological area that could have been held up by Chinese regulators, and they cleared it. So they've been going through deals, and they have been had some openness to not using these punitively. I would say also that if you look at the ZTE, which trades in mainland China and trades in Hong Kong, it is one that has gotten hugely discounted because the uncertainty of how the U.S. is going to treat the currently needed component exports. My view is that they have really bent over backwards over the last month to comply with the kind of new authorization terms, $1 billion fine, $400 million escrow account in case there are future fines, completely changed this past week their management and leadership. They, you might have seen in the press, they have a urinal in their headquarters that they're not even fixing. They have a sign on saying this requires American components to fix. So we're going to leave this broken until we have the component ban permanently lifted.
That'll bring compliance.
Yeah, you would think that would kind of speed things up a little bit, but so I think that the regulatory situation is very positive for ZTE. From here, that should get lifted, but the delay has been much more costly than the fine will be, and they've lost some serious contracts that they would have already gotten in the interim. So I think that ZTE is extremely important to the Chinese leadership. My hope and expectation is that they will be back in business shortly. The administrations in the U.S. tend to be fairly pro-trade because they're kind of responsible for the overall economic picture, where individual congressmen tend to be quite anti-trade, anti-China, because their relationships are with individual producers who can benefit from protectionism. Right. And China is a convenient counterpoint. I'm trying to say this respectfully,
Sure.
but all the types of kind of xenophobia that can enter into politics tends to be most concentrated with individual congressmen and senators. Much worse in terms of position taking than actual policy making. So a lot of rhetoric, a lot of Twitter, a lot of animus, but when it comes time to actually pass laws, they're less reflective of that animus. There's kind of stops along the way. And in fact, these stops along the way let you badmouth China and trade, and then at the last minute water things down enough to get things going again. For example, in the conference process between the House and the Senate, you have a lot of things taken out that individual congressmen and senators kind of loudly claim that they want. So it lets them kind of have it both ways. But I think it's reasonably likely that there's progress in ZTE. And then that will free up a lot of things that they've been waiting on. And I think the biggest example of that is the Qualcomm acquisition of NXP, a big semiconductor deal. And we're shareholders of NXP. We're certainly following that closely. But that's kind of some drama this month. The walk date for that deal is July 25th. And that walk date is one that nobody has any particular desire to extend. Both the buyer and seller are willing to walk then. And so 3 weeks from now, we'll know whether that's been fixed. The ZTE deal is, I think, necessary, but not sufficient. And then we'll see if things kind of loosen up here. So there's a lot of drama. There's big discounts. There's kind of fear and uncertainty, but something that that could see a lot of interesting action in the next few weeks. There's very starkly different views within this administration in the U.S., something the Chinese don't have to deal with as much as we do. Different advisors recommending different courses of action. But one thing we've noticed is days that the kind of drama has been ratcheted up on trade war talk, the markets have done very badly. When they do very badly, the White House seems to kind of react to that. So whether or not they should be reacting to such things day to day, that has had some impact on which advisors are most listened to.
Interesting. It will be interesting. It will be really interesting to see what happens going forward too, because with the president obviously coming with a very different approach to trade and a lot of dynamics, even just like the summit with North Korea. Mm-hmm. But seems to very much pride himself, obviously, on, to quote his book, The Art of the Deal, and his ability to be able to negotiate and to power play and things like that.
Yeah.
And with the North Korean situation, you saw that like, hey, the summit's off. When in reality, it seems like he probably either he never meant that, or maybe he does change his mind that quickly. That's also very possible. But he just wanted to be able to have as much of a power play in that as possible, is what it seemed like to me. Mm-hmm. And it seems like that could be the case here in China. But obviously, like you said, the longer he goes forward, the more it could be that he's really wants to just really nail down and press this. So it's hard to say. So I don't know if you have any views on that.
He seems to really value his relationship with the head of state in China, that's one where the Chinese administration has really been able to kind of ratchet up and down contact, specifically on the ZTE situation, which I think is important to the Chinese. It's important to some people in Congress that have been working on this for years. The administration was sort of a blank slate on it until they came out with some very harsh terms to more or less shut ZTE down, harsher than the kind of professional civil servants who'd been working on it even recommended. And then when they pulled things back to a big fine, new management, but terms that would allow them to get back into business, it was seen as this huge concession, where really it was kind of going back to what originally would have normally happened. But this kind of one-on-one relationships between the head of state, I don't know how important that is to the Chinese. It's very important to this administration. In terms of the negotiating tactics, I would say the North Koreans sure seem to get a lot of what they wanted in the relationship with China. They seem to be getting a lot of what they wanted. So you can always do deals if you kind of give them everything they want to start off with. Our goals were opaque enough that it's hard for me to say what we succeeded at or failed at, but we sure gave them a lot.
So in light of all these dynamics going on, specifically on the regulatory side, of course, but we did, well, the trade side, I should say, with China, of course, we began by talking about the domestic regulatory environment and its impact on banking. In light of those two situations, do you have some investment opportunities that you're most excited about going forward?
Sure, I do. I have two that I would mention. While we're still in China, I would put the NXP, ticker NXPI, high on the list. The spread, the offer is $127.50 offered by Qualcomm. There is a discount of over $20 to that spread, and we will know one way or another in 3 weeks from today. What is most compelling to me about that is not any level of certainty that we will in fact get paid that $20, but instead a view that it is worth the current market price without the deal, especially with a $2 billion breakup fee that's owed if the deal is abandoned on the 25th. So I think this is kind of a heads we win, tails we tie. And maybe if you kind of have a more Chinese view of time horizon, by kind of over the longer term, it's probably heads you win, tails you win. So I think NXP Semi is a investment that's really been heavily impacted by the trade drama with China, and any kind of resolution on that would help it hugely. I would have said Cavium, which was an investment of ours, is an investment of ours, but that's kind of resolved for the most part. ZTE itself is one that could really benefit from a resolution, although I don't feel as confident about its value without a deal. So it doesn't have that kind of value aspect that I think NXP does. And in the U.S., I would say it's more of a view on the consolidation. We think there's going to be a ton of consolidation in media and telecom. I think there's going to be a ton of consolidation in banks and thrifts. And it's easier to think about from an overall portfolio perspective, but one that, and if you look at the kind of banks where we've been most involved with in a concentrated level, both in terms of our capital and my kind of efforts, OBA Financial was sold, Ocean Shore was sold, a number of banks in Connecticut where I live, which sold, that really had concentrated investments and concentrated efforts to encourage deals. The one that's really been kind of on the back burner for a few years now is BNCC, which is BNC Corp, which is a very interesting situation. It is a bargain. It is quite likely to sell, although the board member that one of the large shareholders put on was put on with a standstill, so that the people who would be best positioned to encourage the sale were unable to proceed for a little bit of time. That time period's coming up before too long, and I think that the current management and board should see the writing on the wall. There's no reason to kind of force another activist situation. The vast majority of shareholders want them to sell. It's worth far more to another bank, but that's one that I think is very interesting. And if you look at our best kind of successes in banks and thrifts in the past, there is frequently this kind of timeline embarrassment where I have a view of what should happen, and there's kind of a year or two goes by, and it gets real quiet because nothing seems to be happening, and then it eventually sells. I think that pattern could repeat itself here, but that's one that I think is a very valuable, ignored and promising a deal target. I thought that for a while, but there was this kind of specific hiccup along the way of a board member who I think was helpful as a board member for the continuing operations, but was not able to, at the same time, push for a sale that can go forward at this point before too long, and with the most input from this current board and management if they do it now.
Excellent. Chris, as always, great to have you on the show. Thanks for joining us today.
Thank you, Brian.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.